All right, topic number three, we are going to discuss the ironic side of inflation, Patrick. And I'm just going to let you explain the context on this one because this is kind of funny. The very problem we're trying to solve, we seem to be making it worse at the same time.
Isn't it hilarious though? We look at what's happening with inflation. April numbers come out. We actually ticked up in terms of inflation. And JG, I've said many, many times, inflation isn't going away anytime soon. As a matter of fact, we may see another tick up. And I get that everybody's going, well, no, energy prices are coming down, oil prices are falling. I'm going to stay true to what I still believe my thesis is around oil prices, which will in fact increase inflation a little bit more later this year because oil is the thing. So let's just slow down and go back a little bit to what we're talking about here. Is when we look at inflation, we saw food prices go up. Like literally, I think 8 or 10%. It is remarkable.
I'll put up a chart now. So, cost of food in Canada, April 2023, 8.3%. Now, the trend is decreasing, but still up 8.3%.
You still have to look at base rate. It's up 8.3%. I mean, that's nuts. Okay, so that aside, then we look at the big one, which is almost 30%, I think, of inflation, of our CPI, which was shelter costs, rent, and oh, by the way, interest payments on your mortgage. Isn't that interesting? That's the ironic part of it. Here we are raising interest rates, and I'm going to say it again for 100 times. I'll go down in history of being absolutely right or absolutely wrong, but I'm telling you right now, raising interest rates is not going to affect our inflation numbers. I just don't believe it. It makes no sense to me that it can. It could slow down housing, no doubt about it, but it's not going to slow down inflation. And what's interesting about that point is that as they've increased interest rates, it becomes a part of inflation. So when we look at shelter costs for rent and we look at cost of carrying a mortgage, interest rates play into that. I think it's 30%, almost 30% of the cost of the rise in inflation. So it's all to say this: is it's just so ironic, don't you think, that the thing that's supposed to fix the problem is part of the problem.
As the other thing too is interest rates are also push up higher interest rates also push up higher rents because the more expensive it is to purchase, well, then people decide, okay, well, I'm going to rent. That creates more rental demand, and as a result of more rental demand, rental rates go up. So it is interesting, and I think one of the biggest fascination for people to understand is that inflation truly is a loop. It's a hyperloop, and it kind of feeds on itself. And that's what you're saying, Patrick, is that as we raise interest rates, which is supposed to counter inflation, that contributes to increasing inflation. But it had definitely, no doubt, has slowed down the real estate market, Patrick, in terms of many different how you look at things. Many factors of the real estate market has slowed down, which is a huge part of Canada's GDP, but doesn't mean it has totally solved the inflation problem, as you mentioned, because I'll put up another chart here, and month over month inflation is now at 0.7%. And if you look back to February was 0.4, then March was 0.5, now April's 0.7. We're now trending back up because we were trending down. We were trending back up, and year over year inflation is at 4.4 as of April 2023. And in March, we were at 4.3. So essentially relatively stable there compared to where we were last year. At this time, we were in the 7.5s and 8 is where we were at this time last year. So we definitely have slowed it down for sure. And we'll see where it continues to go.
It's interesting about inflation, and I'll just throw this out there. Whether we want to share this is up to us. But ultimately, I was in Kelowna, and I'll talk a little bit about being in Kelowna, speaking at one of the events with our trusted partners, Real Property Management. But when we went out, we go out for dinner, and historically, JG, if I was going for dinner, and I know our eating habits and our drinking habits, and I would be able to go, okay, well, there's 5 of us going, and $100 a head, that usually is a meal in some form of a beverage, an alcoholic beverage, by the way, not water. I always buy rounds of water for everybody, but in an alcoholic beverage, I used to use $100 as a math. What was do you have math around that?
Yeah, roughly that. Yeah. 100, $125 a head. Yeah.
Yeah. Right. And 125, you bought a nicer bottle of wine or something that brought that up. Guess what? I'm in Kelowna, and this is not my only experience, but Kelowna and a couple of other dinners that we've gone out for recently. And I'm into that $150, $175 range. And I'm going, what the hell is going on here? Like, my taste didn't go up. I'm not buying more expensive, like different food items, I guess. But I'm looking at it going, holy cow, that's quite an increase. And that's just a kind of a side note, but that's what I'm
No, but but you're right, Patrick. And you know what? And this is how the economy has slowed down and will continue to slow down. Is we start making different decisions. I'll share a very similar story, Patrick. Different but similar. Which is, I went. My wife texted me the other day. I was out, and she says, "Hey, can you pick me up a beverage?" I happen to be right around the corner from Starbucks, so I decided, yeah. So I pull the truck into Starbucks. I order two kind of like, medium, the grande size, which isn't their super duper size. It's not their small size. It's kind of in the middle. I ordered uh, a, a, an oat coffee, like iced coffee for me. And then I ordered a lemonade thing for her. Dude, $15. Okay. And I mean, we can afford it. And I'm like, and you can afford your meals and I can afford that. And I'm thinking, that's it. I'm done. I'm not freaking spending $15 on two drinks. No, that's it. This is my last time I'm stopping here. And that's the bottom line. And I was a regular Starbucks frequenter, but I'm done spending that kind of money on drinks. That's ridiculous. The only way those prices are going to come down is if you stop spending it. So stop spending it.
Well, and I feel the same way about certain things. As you know, my wife Stephanie, and we joke about my entourage of chefs, but I literally have people who love to cook that I'm at the benefit of, and so going to a restaurant for a meal that's not as good, but is going to cost me 300, 400, 500 bucks, I'm going, no, I'm not into this anymore. So, anyways, we joke about it, but that's what's going on.
So inflation is a bit of an interesting. It's still there's definitely still a question mark around it, Patrick. Where inflation's going to go. It's been trending down. We showed the charts, and when I say where inflation's going to go, I think ultimately it's going to continue to come down. But it doesn't mean the Bank of Canada will not have to raise interest rates a couple more times to continue to nip it in the butt.
I've got to say, I don't agree with you. I don't think it's going to come down. It will eventually come down. I mean, what, 2025? I think we are going to see significant increases in inflation over the next 2 years. I think we're really going to start to feel some pain in terms of just general CPI. From a housing point of view, I still believe strongly that we need to hold real estate. This is not just about, these are times we've never experienced before. We've been through all sorts of real estate cycles, economic recessions, almost recessions. We've been through so many different things. This time is different because it is in fact a global issue. Now, we've been through this, not in my lifetime, not in your lifetime, where we literally have a global issue, and it's even bigger than the great financial crisis of years ago in 2007, 2008, 09 kind of thing, because that was kind of U.S. and primarily U.S. and Canada was at the effect of that. This is far bigger than that, far bigger. So we're seeing things that are happening that's why I'm saying interest rates, I don't think they're going to have a meaningful impact on inflation here in Canada, or would they even in the US, as much as they talk about it. These are a way bigger issue, and I think we're going to experience more inflation, and this is exactly why we need to buy those hard assets, and we know rents are going to go up. What the hell are they doing with 1.5 million people coming into this country this year? Drives me crazy because it's so unorganized and poorly planned. And I actually am starting to feel a lot of compassion and empathy for people who are getting here, can't find a place to live, can't find a job that really relates to what they do and what they have an expertise in, and they can't afford when they do find something. It's like crazy what's going on, and this is all going to impact our economy in terms of increased inflation.
As you mentioned, Patrick, inflation is, it does contribute to your housing prices. As inflation rises, so do the price of your home. And as a result, your real estate values go up. So as a real estate investor, that's why you're saying, Patrick, hold those hard assets called real estate. And over time, as inflation, if it continues to go up, as you're mentioning, Patrick, then you're going to benefit from that as a real estate investor. But I do want to specify one last thing before we end this sticky note, which is it's important to differentiate between holding just any real estate and holding cash flow producing real estate, because the difference is when the costs of your real estate go up, you can increase rents. You have revenue coming in to pay those expenses. If you just are holding real estate for the sake of holding real estate, yeah, there's some benefit to that, but it's certainly not as powerful as cash flow producing real estate. And we're going to have to leave it there, Patrick, and talk about that on the next episode.
Let's do it. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.